Hi, and welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about the fact that you cannot negotiate a pre-qualification. But first, remember, stop paying your rent with cash. Make sure you pay with a check. If you don't possess a check, or if they don't take a check, get a cashier's check, make a copy of it before you give it to them for the exact amount so we can show 12 months of it coming out of your bank account if we need it. All right, moving on. So let's talk about the idea of negotiating a prequal. First of all, you can't. All right, so recently I've had several clients and realtors trying to come at different angles to try and negotiate a pre-qualification. Well, they say they have a lot of money. Great. Well, they say they make a lot of money. Great. Well, they say that their credit score might have gone up. We'll see. You have to think about a pre-qualification or pre-approval. I always like to think of it as like legs of a stool, okay? It is not one singular event that goes, boom, you're pre-qualified. There are multiple things that go into it, all right? So when you're dealing with that, you have to think, you might make a lot of money, but if you've made a lot of bad decisions on your credit, you don't qualify. If you don't have a qualifying credit score, that's one table, like saw that table leg off, boom, table falls over, all right? If you've got really good credit, but you don't make very much money, and you want to buy an expensive house, your debt to income ratio doesn't work. So that's two different legs, right? Because you're dealing with your credit and what is actually reporting on there, right? And your credit score itself is contingent upon multiple things. It's contingent upon, do you have too much debt on your credit cards versus the available limit? Did you have late payments? Did you have collections? You know, all those things that go into it impact your score. But additionally, are you that person that went out and bought themselves a $700 or $800 a month car payment and then decided that you wanted to buy a house? So now your car payment is the majority of what would be a house payment, and you reversed what you're supposed to do. You buy your house before you buy your toys. Okay, so if that's the case, your debt to income ratio is too high. So how much debt is on there? Do you have a ton of student loans? Do you have a ton of credit cards? Are you maxed out on all your credit cards? What is your monthly debt that is pulled in with your credit report? That is one inclusive leg. If any of those are too high, and the debt itself is creates between the debt and your income creates a debt to income ratio. So your debt to income ratio is a combined what you make versus what you owe. If that's messed up, boom, done. So although you may have $40,000 in the bank, if your debt to income ratio is too high, so off that table leg, falls over. Doesn't work, you can't pre-qualify. Okay, so all of those work in tandem. So when somebody says, yeah, but they've got, $50,000 in the bank, my response is exactly what the underwriters and the lenders will do. Okay, great. Pay off some of the debt that you have in order to lower your debt to income ratio, right? So then we could be right back in. I have people that are like, well, I don't want to spend money. The ones that get me all the time is they try and get a zero down loan and they've got all this money in the bank. First of all, you don't qualify because you have too much assets. Therefore, you don't qualify for a zero down loan. But if you don't want to use your own assets, then people are trying to negotiate. It doesn't make any sense. You're trying to buy a home. Follow the guidelines of what is required to get into the home. Then manage your money, have a budget. All right, we talked before how to actually a budget to buy a home. Well, that budget should be part of your thought process when buying the home. How much do you want to spend? How much debt do you already have? How much are you making? You're not going to say, well, I should be getting a promotion. Nobody cares what you should be doing. That's fantastic for your career, but we can only deal with the reality of today. What do you have today, and how does it impact your total qualification? So keep those things in mind. So you can't negotiate a prequal saying, well, I've got a lot of money in the bank. Great, pay off your debt. Well, what you see was, I don't care what happened to your credit. And I've addressed that before. We're dealing with the reality of now. And again, it's not non-empathetic. It's a matter of, I'm looking at exactly what's in front of me, and either it works or it doesn't. And although, I'd love to get to know you and understand potentially what happened to your life, it does not help. Whatever happened doesn't mitigate what is physically on there. The only way that you can do that is if there are extenuating circumstances. You might have to go through some credit repair. And those extenuating circumstances may help you remove some of that from the credit, but it doesn't change the fact that it's there now. So it has to be addressed one way or the other. All right? So, gotta focus on your reality. Find out, watch the videos on this channel, and that's the whole point, right? So I'm trying to teach you tactically how to buy a home. I'm not dealing with emotions. I'm dealing with lending guidelines. What do you need? How do you get there? And what is it the next step for you to buy a home? All right? So keep that in mind. Check out the videos on the channel. Make sure that you understand you can't negotiate it. You have to fall into lending guidelines. And from there, I wish you the best of luck. All right? Hope this was helpful. If you have any questions about this, leave the comments below. And until next time, it's all for one and one for all.